Welcome back. In our previous video, we would have started looking at our example question, Pam Lam and Tien. And before we continue, I would like to make a correction. When I enter the values for motor vehicle and inventory in the previous video, I said debit motor vehicle, and then I turned and said credit motor vehicle again, then I said debit inventory or stock, and then I said credited again. What I should have stated was that we were here debiting the realization account. This is the account that we're debiting. We debit realization for $65,800, and the motor vehicle account is credited for the same $65,800 to close that account off the books of the partnership. And then we debit the realization account again for $52,000 for inventory, and the inventory account is credited for the same $52,000 in order to close that off the books of the business. So what we are going to do as we are continue looking at this question, we are going to look here at entering the opening balances for our bank. So the balance on our bank account is a liability. It's an overdraft of $11,000. So we are going to enter this $11,000 on the credit side of the bank account. Let's go on. So balance brought down on the bank, $11,000. And that's the capital. The capital accounts for Pam. It accounts for Pam is $128,000, Lam $120,000, and Tien $72,000. So let's enter those opening balances on the capital accounts for the partners. So the credit balances. So balance brought down. Pam is $128,000. Lam $120,000. And Tien $72,000. Okay, so we've entered the balances on the capital accounts for the partners. Also, we say the current accounts for Pam was $6,810. Credit Lam $5,100. And remember, we stated the credit balance on a current account is the amount that the partner is still entitled to, which would also increase their capital. So these, remember that the partnership is being closed. So since it is being closed, it means that the current account will also be closed off from the books of the business. So since the partners are entitled, Pam and Lam respectively, are entitled to these amounts, these have to be credited to the capital account to show that they're entitled to this. And Tien has a debit balance of $14,310. Remember, we stated that a debit balance on a partner's current account signals that the partner has withdrawn too much out of the business. So therefore, the partner is not entitled to this $14,310. So this, to close his account, his $14,310 would be debited in the capital account, thus reducing the amount of capital that he is entitled to. So let's go ahead and close off these current accounts by entering these figures in the capital account. So current account, so for Pam, $6,810. For Lam, $5,100 credit. So this is increasing the amount they're entitled to. And for Tien, closing his current account, $14,310. He's not entitled to this. And if you look, this is on the debit side of his capital account, and you will see if you subtract that from the 72,000, his amount of investment will be decreased. Okay, so we've entered those figures for the current account in the capital account, and the opening balances for the partners in the capital account. We've also entered the balance on the bank account as well. And we have so far closed off the premises, equipment, motor vehicles, and inventory accounts from the books of the business. And when we go back to the question, in the question it stated that the company, which is Apex Limited, agreed to pay off the partnership's creditors. So we're going to, so this means that the partners of themselves, they're not paying their creditors, because we stated that when the partner is paying their liabilities, their creditors, you debit the creditors account and you credit either cash or bank. But a partnership, this is on the dissolutions. On the dissolutions, when the partner is paying the creditors, you debit the creditors account and you credit either cash or bank to show that you pay. However, in this case, the partners are not paying that amount. The company is going to take on that and pay off themselves. So therefore, this will now become a liability on the company's account, and we will be closing off the partner's creditors account by debiting the creditors and crediting the realization account for the amount that is owed to the creditors, which is $16,800. So let's go ahead and credit the realization account. So credit realization for $16,800, and the creditors account is debited for the same amount, thus closing that off. Let's look at what else we need to do from our accounting entries with respect to dissolution. Our accounting entries also state to record the proceeds received from assets realized, or if we had disposed of an asset, which means we sold an asset, we would then have to debit either cash or bank and credit the realization account. So the partnership did not sell any assets, so we will ignore that entry. The next one is to record the assets taken over by the partner, and you have to record that at the value that the partner took them at. And in order to record the assets taken by the partner, you have to debit that particular partner's capital account and credit the realization account for the valuation of the asset taken by the partner. So let's look and see what the partners took and who took any assets. So we have in our question, it says Tien took home one of the motor vehicles. It had a book value of $15,000, but Tien is taking it at a valuation of $12,500. So therefore, Tien's capital account will be debited for $12,500, and the realization account will be credited for the same $12,500. $500. So let's record the asset taken by Tien, the partner. So we're going to go to his capital account and debit it. For $12,500. I'm gonna put here MV to let you know that it was a motor vehicle that he took at that valuation. Then we're going to go back to the realization account and credit it for the same $12,500. So the details here is capital account, whose capital account, Tien, for the motor vehicle that he took at the value of $12,500. So we've looked at that entry. The next accounting entry that we have to look at on the dissolutions, but remember that when the partnership is being taken over by a company, the same accounting entries that we would use for dissolving a partnership are the same accounting entries that we would use, because we have to close the partnership business first. And we have to close off all the accounts on the books of the partnerships. So that's why we're using these accounting entries. And then with some modification recording the takeover, so to speak. So now let's look at the another accounting entry on the dissolution. The next one, you have to record the funds collected from receivables. So any money that the partnership collects from their credit customers, we have to record that. And how do we record the money collected from our credit customers? We record that by debiting the cash or bank account. In this case, we have a bank account, so we're going to debit the bank account and credit accounts receivable. And when you do that, what you're trying to do is close the accounts receivable account off the books of the partnership. So let's see how much we have to debit the bank account for, because we need to know how much money we received. So it states that debtors realized $23,900. In other words, what this is trying to say, we collected $23,900 from the debtors. So we have to record this in the bank account by debiting bank and crediting the receivables account. So let's go ahead and do that. Accounts receivable, $23,900. But if we look at the question states, if we go back to the balance sheet of the partnership, the total debtors, which means the total money outstanding, was $24,200. But now we only received $23,900. And our accounting entry states that any funds not collected will be deemed either a bad debt or a discount, and that portion will be debited to the realization account. And that helps us close off the partners and the accounts receivable. So you find the difference. So what you need to do is subtract the $23,900 from the $24,200 in order to record this in the realization account. So let's go to the realization account, and what we're going to record it, let's record it as a discount, allowed, but we're going to receivable discount, and that is $300. Okay, so we've now recorded the discount from the receivables. When we come back, we will continue this question.